Welcome back to RR Corporates. Now we are discussing on Section 186 of Companies Act 2013, Loans, Guarantees, Investments. In this video, we decode Section 186 of Companies Act 2013 with the practical insights, case examples, MCA clarifications, and professional guidance. We discuss topics like interest rate restrictions, foreign subsidiaries, optionally convertible debentures, OCDs, performance guarantees, and interplay with Section 185. So, can the carve-out provided in Section 186, subsection 2 for employee loans be extended to Section 186, subsection 7 relating to interest rates? The answer is yes. Section 186, subsection 7 relates to charging interest not lower than prevailing government security yield. Since 186, subsection 2 explicitly excludes employees' loans, so this exclusion also logically extends to Section 186, subsection 7. Can holding company give a low interest loan to its foreign only owned subsidiary? Answer is no. Section 186, subsection 7 applies even to foreign only owned subsidiaries. The rate of interest cannot be lower than the prevailing yield of comparable government securities. The law views foreign subsidiaries as body corporates. Hence, within its scope, even though rates may be lower abroad, Indian companies must comply with the Indian thresholds. If the company subscribes to OCDs, optionally convertible debentures, issued by foreign subsidiary, will it be treated as an investment or a loan? It is treated as an investment, not a loan. Therefore, it falls under Section 186, subsection 2C, not under subsection 186 2A or 186 7, even if the coupon rate is below the government security yield. So, it is treated as an investment, not as a loan. Can a company argue that OCDs, optionally convertible debentures, always fall under Section 186 2C despite their treatment under FEMA? Yes, FEMA clarification does not override Companies Act classification. Under Section 186, subscription to OCDs is considered investment and governed by 186 2C, regardless of FEMA treatment. Can provisions for doubtful loans be excluded from Section 186 limit calculations? Can provisions for doubtful loans be excluded from Section 186 limit calculations? Answer is no. Provisions cannot be excluded while calculating limits. Yes, return of loans or investments completely de-recognized can be excluded. Is unpaid rent between two companies treated as a loan under Section 186? Answer is no. Unpaid rent arises from a lease arrangement, not a loan. So, however, if structured as a financial accommodation, it may qualify as a loan. Does the term loan under Section 186, does the term loan under 186 only means monetary loans? The word loan under 186 means, is it monetary loan? Answer is no. The term is not defined narrowly. It can include other forms of financial assistance, but trade advances linked to delivery of goods or services are not loans. Can the board delegate its power to approve loans or investments under Section 186? Yes, but only post-board approval. Execution may be delegated under Section 179(3), but approval under Section 186 must be by unanimous board resolution. Is resolution under Section 179 sufficient for loans and investment under Section 186? No. Separate unanimous board resolution under Section 186 subsection 5 is specifically required, even if a general power is approved under Section 179. Does performance guarantee fall under Section 186? No. Section 186 is only applies to financial guarantees. Performance guarantees are excluded. Can a company give guarantee to subsidiaries if that not in principal businesses? Yes, if permitted under its ancillary object clause. Guarantees to subsidiaries are valid, even if the company's main business is unrelated. Can a foreign wholly owned subsidiary borrow at a rate lower than government security thresholds? Will it trigger FEMA or Section 186 subsection 7? Section 186 subsection 7 applies only to Indian companies. A foreign wholly owned subsidiary can borrow locally at a lower rate. However, guarantees by the Indian parent must comply with FEMA norms. Can a company provide guarantee on gratuitous basis? Yes, guarantees are not subject to Section 186 subsection 7's interest restrictions. However, check the company's MOA and related party arm's length pricing. Is the exemption under Section 186(11) absolute? Yes, it is an absolute exemption for financial institutions. In contrast, exemptions under the proviso to Section 186(3) are limited only to that subsection. What is the difference between 185 and 186? Can both sections apply together? Section 185 prohibits or restricts loans to directors or entities in which directors are interested. This is what Section 185. Whereas Section 186 regulates intercorporate loans, regulates investments, guarantees with monetary limits. Example, loan to another company where director is interested. Both sections apply. Loan to foreign subsidiary, Section 186 applies. Personal loan to director, Section 185 applies. We have two channels, RR Corporates, other channel RR Legal Talks. Please subscribe both the channels and hit the bell icon so that you will not miss any of our latest updated videos. Thank you.